The White House has again repeated warnings that a Russian invasion of Ukraine could begin any day. Senior officials won't confirm US intelligence reports an invasion is planned for Wednesday. Australia has shut down its embassy in Kiev as a flashpoint looms, as the threat of war drives oil prices to the highest level since 2014. As 130,000 Russian troops mass on Ukraine's borders, Brent crude is hitting nearly 96 US. 2 years ago, crude prices plunged to a low of just $20 a barrel when COVID first hit. The rebound from the pandemic has seen demand for oil already on the rise, but markets were roiled on Friday night as the threat of war escalated. Demand is fast outstripping supply, with fears OPEC will be unwilling to fill the shortfall. And that could see Australian drivers and businesses, already paying record prices, slugged even harder at the pump. Oil analyst and head of research for Tribeca Investment, Todd Warren, says if Russian tanks roll into Ukraine, oil will move well into triple-digit figures.
Yeah, well, lots going on in that part of the world, obviously, and with Russia such a significant contributor to the world supply of oil and gas, any moves into the Ukraine would be felt significantly in an environment where oil prices and indeed gas prices are already elevated and tightening as we speak.
So Russia is the world's third biggest oil producer. Is there any expectation that OPEC will fill the gap, and could it?
Well, I think there's a hope. Obviously, we've seen some coordinated increases in supply out of OPEC countries plus Russia. But indeed, what we've seen in recent times is, despite their announcements that they would be increasing every month their supply by some 400,000 barrels per day, we've seen a disappointment on that, frankly, in terms of supply. So there is now some concern as to whether indeed they could fill the gap. Russia supplies some 5 million barrels a day of oil into the export market. So I think there are some significant doubts and realistic and reasonable doubts, really, that OPEC could indeed plug that gap.
Well, Australian petrol prices are at record highs. Just how high could they go?
Well, I mean, there's a couple of factors moving there. Obviously, with oil on the increase, with a Russian invasion of Ukraine, you'd expect oil to move well into the triple digits figures. But then the other contributing factor here in Australia is, of course, the Aussie Dollar. If the Aussie dollar was to weaken at the same time, then the impulse at the pump would be even greater. It is an ability of our Australian producers to plug that gap, and as we know, we don't produce near enough oil domestically. So both factors very important, and you can expect, unfortunately, ongoing pain in the hip pocket when it comes to filling the tank.
We know, Todd, that businesses here are just starting to recover from the pandemic. It is reporting season. We're speaking to CEOs a lot about inflation and rates on the rise and how that's flowing through their input costs and then for the consumers ultimately. Just how big a hit could this be to the supply chains?
Well, significant. I mean, the problem we face is it's not just oil and gas. It's pretty much all commodities, really, which are very much at the whim of inflation. Now, we've been hearing about the so-called transitory nature of inflation from many market commentators, but the reality is it's seemingly anything but. So what we will see is we expect to see more inflation coming through, and indeed at higher levels, and for a more sustained period of time. Now, what that means is, of course, that for any producer looking to increase supply, their cost of capital goes up, and their ability, therefore, to fund any increase in supply is more challenged. So all of that leads to more challenges, frankly, in the longer term with regards to any increase in supply.
Well, Russia exports 40% of Europe's gas needs. Is there an export opportunity for Australia?
Absolutely, yeah. So, I mean, ironically, three biggest beneficiaries potentially of any Russian invasion into Ukraine are the US, Australia and the Middle East, Qatar specifically. They are the three largest exporters of LNG in the current market, and indeed looking to grow, albeit no LNG export happens overnight. It takes a long period of time. But what we have already seen and what we saw during the European summer, when the Russians started to pull back on their supplies, largely as a political tool, we did see gas prices go through the roof in Europe, and therefore we saw LNG being dragged into the Atlantic Basin and into Europe, of course, and that benefited some of the producers here in Australia as the spot cargo price went through the roof. We've seen that from guys like Santos and Woodside.
Todd Warren, great to talk to you. Thanks for your insight.
Thanks, Catherine.